we continue to see that theme of export outperformance from the country?
Thank you, Sherry, for having me today. Yes, indeed, we're going to still see a very strong set of numbers for China's trade. I expect China's exports to grow at around 33% year on year, and imports may surge well above 50% year on year for this month. And trade surplus will remain wide at around 51.6 billion. In fact, exports performance remains the key theme in China's recovery, and the factors or drivers of that outperformance has broadened from initially China was just filling in the gap of supply chain from the supply side to now we are going to see a much stronger external sector recovery, and the demand side is still supportive of this key theme of China's recovery.
With the trade surplus continuing to widen, what does that mean for the Chinese yuan? This GTV chart on the Bloomberg showing how the yuan is trading nears the consensus forecast from economists now.
Yeah, I think trade surplus is still supportive of yuan. In fact, I argue that the yuan outperformance so far this year has been mainly driven by the wide trade surplus, as well as capital inflows coming into China. But going out to a few quarters from here, we do see the balance of risks become more balanced in the coming months. As firstly, I think that China's growth outperformance or growth differentials with the rest of the world might be narrowing as the rest of the world catch up with the recovery. And as well as the same time, I think China and US EU differentials might be narrowing as markets start to talk about US tapering, while China maintains its path of neutral monetary policy.
The regulatory agenda seems to be picking up momentum again now that growth has kind of stabilized. How much does that weigh on future growth prospects?
I think for China's specific case, the long-term growth is much more balanced. We're not seeing very spectacular growth rates at around at above 10%, which is above its potential rate. So for China's case, we do see a normalization or convergence towards its potential growth rates of 5.5% in the long term. So as growth momentum has been relatively robust, we do see the authorities picking up in the pace of deleveraging so that to maintain a relatively stable and sustainable debt to GDP ratio. So for this year, we actually forecast a slight decline in the debt to GDP ratio, which is partly supported by the favorable nominal GDP growth path, and also the authorities' firm stance on stabilizing the debt growth overall.
Do you see the recovery in the consumer part of the puzzle as still being missing? Because it has been surprisingly weak to a lot of analysts.
Yes, indeed. It is being one of the missing puzzles or one of the spectrum of the economy that's lagging the overall pace of growth momentum. And I think a few factors contribute to this. Firstly, China did not embark on any flat-style stimulus to the household, like the developed countries which had household subsidies or handouts directly. That part is notably missing in China, which means that household consumption is not going to surge the way it did in the developed economies. And secondly, I think employment and wage growth in China is still relatively lower compared to the pre-pandemic levels. So the lack of fast wage growth might be denting the consumption recovery. And in the longer term, I think the government and the authorities is aware of, or it's cautious of household debt growth. So by taking control of household debt growth means that consumption is unlikely to pick up at any fast or aggressive pace. It's just going to be a gradual grind up compared to the rest of the economy.